From the depths of the COVID recession to the recovery, it's been a big year for Australia's economy and the businesses that keep it running. This August will offer a pretty comprehensive insight into how Australia's biggest companies have fared over the last year. Around 170 of the top 200 will report their full year or half year results. Over the 2021 financial year, the share market surged to new highs. Some analysts expect the current lofty share market valuations will be justified, with earnings estimates at levels last seen in 2008. There are some sure winners, the miners, thanks to iron ore prices reaching new highs. The major players, including BHP and Fortescue, are expected to boost overall earnings, after Rio Tinto already delivered a record first half profit.
If you look at what most analysts, including ourselves, expect with regards to earnings upgrades from materials, they're quite incredible. In fact, some people believe they could be up as much as 70%.
Retailers are among the likely winners, with turnover rising strongly each month compared to a year earlier. But with shopping strips in some parts of the country emptying again, some are faring better than others. The likes of JB Hi-Fi, Harvey Norman, Temple & Webster and Super Retail Group have benefited, but analysts say the working from home beneficiaries may have passed their peak.
It's a question of whether or not they saw a slowdown at the last couple of months.
It's no surprise that the travel sector remains heavily impacted by border closures, and these results will include the period after government support like JobKeeper was removed.
The travel and the airline sectors were that obvious recovery trade, which now appears to be delayed almost indefinitely, and there's certainly no time frame around it.
Companies, particularly the cashed-up miners, are expected to return more money to shareholders.
We're going to see quite good dividend outcomes, so I suspect in the resources sector especially, you'll continue to see balance sheet that will underpin very good dividend and potential buyback situations.
And while CBA is the only major bank to report in August, analysts are watching for special dividends or share buybacks in the financial sector too. One thing to keep in mind is that reporting season is backward looking. This time around, there'll be a big focus on the guidance and outlook statements companies provide for the period ahead, which includes the current COVID lockdowns. This focus on outlooks could potentially be good news for struggling sectors like travel.
It may actually therefore mean they might deliver what looks like pretty terrible numbers headline, but also their stock goes up because they actually see better times ahead.
But the opposite could also play out, with stocks sold off despite strong results if their guidance disappoints. And some will keep their cards close to their chests.
It's very difficult if you're in corporate Australia right now, where you've got a situation with a potentially indefinite lockdown period in some of your biggest markets, for you to be able to give quite clear guidance.
Companies reporting a recovery story, but it's one that's not over yet.